we're gonna start with that because we actually finished the content for the week. So today I'm going to start the content for next week. Before we do that, I want you guys to see what you need to deliver this week. That is on Sunday. That's the due date for the first deliverable. Okay, so right, you're watching my screen already, right?
Yes, teacher.
Yes.
Okay, so you need to start work. Well, you should be already working on building the information from the case. You already have. If you remember your first homework you did with me, you actually started selecting the main product, defining the process, working on the mission and vision and history of the company. So you should already have these two done by now. Next part is that you need to define the structure of variable and fixed cost in addition to defining the cost elements of the main product. And I am seeing here that actually I got it incorrectly. Not only you need to do that, but also you need to product and calculate the unit cost. Of put here which one is gonna be the main product. And the reason why I'm putting this here is because you guys already know it. So we can
Teacher, this delivery is in teams or individual?
it's teams. All these in teams. The only one you're gonna do individual is gonna be the final report. Like the written final report, that one's individual.
Okay, thank you.
Everything else is gonna be on teams. Okay. So you need to get together with your teams, and you need to work on 3 documents you're going to be uploading. One is the presentation. You already have that. I mean, it's partial. You have it partial because you have only the basically the cost structure, the mission vision, and what else? Well, the selection of the main product, and also the production process. I did some comments to some of you. Please follow the comments and change it. It didn't affect your homework at all. It just are general comments. Anyway, still, it's more clear the information you need to fill up inside the deliverables are here in the rubric. So just follow the comment I gave you. Like it's a general comment on the presentation, like use tables instead of just text, something like that. So just that didn't affect your grade. It's just for you guys to work on your presentation and have a better presentation. Okay, so the presentation we're gonna upload it on a PDF file, and it should be it should have the information that you already uploaded for the first homework from a module, and then you need to summarize all the calculations and results you find from the other parts of the assignment. That is analyzing the cash conversion cycle. That's something you've been seeing in module number 2, and also determining the investment and financing needs of the company. Okay, that is if the company needs investment. That's if the company needs financing or if the company should invest in something, right? So it's actually really easy. The real work on that because on doing this you are actually working on the final uh, on the final project. Okay, this is like half the final project. So if you advance on this, then it's not gonna be that hard on week number 4 to deliver the complete project. Anyway, you have until the 15th, which is Monday, and I'm sorry, Sunday. So you have 1, 2, 3 days to work on this. And again, it shouldn't be that hard because you already have like half of this work done between class activities and also with the homeworks. Okay, so is there any question, guys?
Nope.
Something you want to check with me for the raw case. And again, because as I told you, we are going a little bit fast, so we have time before we start the next part of the course. No, no one.
Now I don't have any questions, but if we are in the breakout rooms and we have questions, can we call you? Like, can you help us?
Yes, but I am not gonna make breakout rooms.
Or
This is homework.
oh, okay, so
Remind, right?
Yes,
but
and remind you can write me if you have any questions. And remember, you can only ask me questions from this verse. 1, 2, 3, because these two are for module number 2. So in your next class, ask questions to Professor Sanson, please, about these ones. That's the cash conversion cycle and the financing or investment needs. And I'm really sorry I cannot turn on my video. It's not something against you or anything. It's just that it gets laggy a lot.
it's okay, teacher.
Okay. You see? I'm sorry. Okay, so if there are not any more questions or any questions at all, I'm going to start with the class. And okay, so I guess there aren't. So I want you guys to go to your canvas, go to, what happened? Okay, it's published now. Go to your activity 1.4 and it's variable and absorbing costing, all right? And download this file, this Excel file here. Should look like this. Has some information, then it has financial statements blank, and at the end has a financial statement here, analyzing to products. Okay. Then we having troubles downloading that. So we are halfway on the course, and you need to like see. Well, I not need to, but I will show you like what is the structure that the structure I showed you at the first class. We are advancing on it, and if you have taken notice on that, the first like 2 classes, well, actually 4 classes mostly, because last class we started doing some calculations, but it was mostly just content, you know, like theory about cost accounting and general accounting, how to define the cost, how to identify the financial statements, stuff like that, right? And last class, for example, we actually started working on some calculation, that is the unit valuation methods. You remember standard costing, what were the other 2? Standard costing, I forgot. The I forgot how you say it in English, but it's a standard costing, costo detallista y costo de adquisición. I'm sorry, I forgot the word.
Acquisition cost.
Acquisition cost, and the other one was detallista in English was detail. Detail. Retail cost, okay? So acquisition, retail, and standard. So we saw that, and we reviewed how to use the standard costing to determine the unit cost of an inventory. That is the production, the standard production, and determine the standard costing. So that's where we end last week, and all what we've been watching these past 4 classes, it's the information you need to solve the first derivable. Now, the second part of the course is more about analyzing financial statements and analyzing the cost accounting information. So I'm going to show you two ways to analyze the information, the cost you generate in the information you generate in cost accounting. One way is using a method of analyzing the production and unit cost valuation, and also inventory analysis. There is called variable and absorbing costing. And the other one is cost profit volume ratios. So these two are called, in general, operating indicators or operating ratios will be most adequate. And the main idea of this is that you actually, well, once you have the cost accounting and all the cost information set in place, now you work on analyzing that information to take business decisions. And if you remember at the first class, when we were I think it was the second class, we were defining what accounting was. I show you like a diagram where you had the accountant, and the accountant apply a technique to take financial operations into databases and then build financial statements and then take decisions. So this part will be the part of taking decisions. All right. So I'm going to show you how to do it, and then I'm going to show you what it means for you, and also how you can use it to analyze a product line inside a company, for example. Okay. So that's going to be this week, variable and absorbing costing. Actually, because we are starting today, I am pretty confident that maybe we're gonna finish one class earlier, and I'm happy with that, because other classes I've been giving this, other times I've been giving this course, we actually finish really on the clock. That is, we almost have enough. We just have enough time to finish the operating ratios. So the fact that we are actually starting one class earlier, I'm sorry. It's really good. It's actually a good sign that we're moving in the right direction. So because we have time, I'm gonna give a little bit more time on the activities we're gonna be working on, and of course I'm gonna try to give more time also on the questions you guys might have. So don't be afraid of asking questions. As I told you before, we are an excellent timing. Okay.
Thanks.
So you already download your Excel workbooks, guys.
In which part it is Excel?
Go to your modules, and here module. Okay, go to your modules, and on module number 1 on the activity 1.4, go to the activity, and inside the activity, just click where it says download the exercise file here.
Thanks, teacher, and thanks, Guillermo.
Thank you, Guillermo.
Yeah, no problem.
Okay, so question to all of you, just to know at what, well, no, we'll see that later, don't worry. So we're going to start with something that is called inventory forecast. If you remember, well, not remember, yes, if you can think about the information you've been reviewing with Professor Sanson, you actually check something related with inventory, right? You can tell me what you've been seeing with him.
It's the turnout period of time. It could be the full inventory or the time it. Yeah, I think that it's more into the inventory cycle.
Exactly, it's related with the inventory. Thank you, Guillermo. With the inventory cycle, and it's also known as cash conversion cycle, because when you put all the purchases and payables and all that together, you end up with the cash conversion cycle, and that's what you've been seeing with him. So if you remember the cost of goods manufactured statement, that's the one we reviewed the past classes. You actually start with inventory. You have inventories of raw materials, you have inventories of production in process, and you have inventories of finished products. And at the end, when you subtract and add all these inventories together, you end up with the cost of goods sold. And the cost of goods sold is actually a value for the income statement, right? And the inventories of finished products are actually values you need to have on the balance sheet. Balance and income statement. Okay, So that means that if you are going to be doing a forecast or a budget, you need to know how to forecast the inventory because it's related with both the cost in the income statement and of course it's inside the inventory accounts for the balance sheet, okay? So I want to ask you something. Well, I already showed you. I'm sorry. I want to ask you, how do you think it's the best way to forecast an inventory?
By sales?
By sales? Yes, that's actually a really, really good way to standard to. Well, how would you? Because maybe I think of something else. How would you use the sales to forecast your inventory, Renata?
Because you can predict, like, if I sell a number of things, then later you buy those things and think maybe a little bit more. So you are increasing your sales and you are
Increasing
like
your production at the same time, right?
yes.
So it would be sales times production, something like that. Often, or production function from as a function of the sales, sort of, right?
Yes.
Who else has an idea how to project or forecast an inventory? Well, there are a number of ways. The one that Renata was saying, it's actually one that is used. It's a standard production. You forecast your sales. And forecasting your sales, you forecast your production. Now you have standard quotas of production, and with that you can forecast your inventory. Also, you can have periodic consumption. That is really, it's actually quite normal that factory director tells you, we each month want to end up with this much inventory. So he is telling you, and he gives you like the consumptions he is gonna be doing because maybe it's a really stable company on its production and its sales. So always they kind of almost always purchase the same things and they always have the periodic consumption. Or you can have also a purchasing policy. That is maybe you know or you think you are gonna be also related with the sale. We could think selling a lot of more of your units, so you purchase more, and with that, you actually need to forecast the inventories of the purchase. And again, and the last one is final inventory policy. You can actually have inside the company a policy of something like, we need to end up each month with 50% of final inventory of what we started with. So you just do that and you forecast with the 50%. So as you can see, there are actually quite a few which you can be using, and we're gonna be using one related with the cash conversion cycle, right? Because that's something you've been actually analyzing with the other teacher, and the idea is that these two courses kind of touch like get together in some points, and this is one of the points. Okay, so inside the cash conversion cycle, you have your inventory conversion period, all right? And you know right now that the inventory conversion period are the days that elapse on average to transform raw materials into finished products. That is, the days it passes for you from the moment you get the raw materials inside the inventory to the moment you finish the raw materials to final product. You remember I showed you like a picture. It has like it had toys where you had your raw materials here, and then at the end you had sales. Well, actually here you have products, and the time it takes you to take raw materials to products is the inventory conversion period. Okay, so that is part of the cash conversion cycle, the one that you've been actually seeing. And I don't want to get into explaining more into the cash conversion cycle because you already saw that with Sanson. I just want you guys to retake this formula. And this formula is the inventory conversion period. And well, right now you know that to get this number, what you do is you divide the ending inventory of a period by the average daily inventory of the cost of sales in the same period. So again, the important like notes to take here is that you need to have a really well defined the period days you are working with, or you could get it incorrectly. Okay, so I'm pretty sure that's something you already checked with Sanson. It's just a review of that formula, and I want you to see something here. I am trying to forecast the inventory, and I am telling you I will use this formula. So why is it that we need to do. And before think about that, and before we answer, let's just see like the reason why this is a good way to forecast inventory. Well, first off, because it's related with the cash conversion cycle, and the cash conversion cycle, as you already know, it's a measure of productivity and efficiency of the company. So relate the forecast of the inventory with that actually helps you see if the company is being productive. If you end up with more inventory that you expected, well, it means that you're producing more. So your cash conversion cycle should have been maybe it was reduced or something. So you can work on that. What I mean is to give you a standard to meet and also an indicator of efficiency. Remember, for example, last class when I was showing you the standard costing method of costing. At the end, I told you in the part where you were taking the cost for the labor cost, and you were taking one way where you didn't pass through the activities costing. And I told you, well, you can do that. That's correct for the final result. Where you want to measure efficiency in the company without having those activities cost, it's going to be a little bit difficult for the managing team. So the best way is to go through the activities, even though it had like a few more steps. It was just only for you guys to have a measure of efficiency that you could actually check on. Okay, so also when you do this inventory projection using this way, this policy related with the cash conversion cycle, it will also help you to control the purchasing of the products. I mean, the raw materials inside the inventory. It's not only about producing anymore, it's also about purchasing. So it's going to help you with budget. In other classes, when you see budget and budgeting, you will see that the purchase of the raw material is actually part of the master budget, and that's a really important thing that you need to take into consideration and follow. So based all of this information on these indicators can give you differences, and these differences are reported as operating deviations, all right? Deviations of operations. So those are the reasons why this is a good way to use to project, to forecast inventories in a manufacturing company. And again, going back to the question I gave you, why do you think we're going to use this formula? On how can we use this formula to project the inventory? No?
To see the purchase of new inventory or the production of it?
The ending inventory, which will be the production.
Yes.
Mm-hmm. So you weren't asking, I'm sorry, to see the, well, yes, what I'm looking for, thank you, Renata, what I'm looking for is more like a technical answer, like this, teacher, do this, multiply by this, divided by that. Well, what we do actually is we just need to clear out the formula. So if you see here, we have the inventory, all right? So if you already have this number, which is the one you took like from the historical data, and you need to know the next period of inventory, and you've been doing standard cost accounting, you will have this one here already, right? And all you need to do is just clear this one up and just have it like this. And the multiplication of those days times the cost of goods sold from the period, because you need to have on periods, will give you the ending period inventory. It's really simple, right?
Yes.
Okay, so let's do an example and work on that, okay? So we have a cookie production company, and the cookie production company wants you to forecast the inventory for 3 months of raw materials. And you have the following data, and they tell you that 90% of its cost is raw materials. So you have the inventory conversion cycle on 25 days. You have that the unit cost is 5 pesos, and they're telling you that from this, 90% is raw materials, right? What is that? Well, the other part of the other things inside there, I just the other things left off are just I'm sorry. What is that? It's the other cost element. So you only need that because we are projecting the raw materials inventory. and there is a production of 1,000 cookies. And because there is a production of 1,000 cookies, we can actually assume, because it's a standard production, that these are also the sales. So we produce what we sold. And we have a sales increase of 5% a month. Okay, so what we need to do is we need to apply the formula of ending inventory equals to the inventory conversion period times the cost of goods sold of the period. Okay, that's it. It's gonna give us our cash convert. I mean our ending inventory. So let's do it. The first thing we need to do is actually we need to take the accumulated period, because remember everything is accumulated. So I'm gonna use 30 days. Again, it depends on the days you are using of the period. So if the information that Sanson show you, it's 31 days or 30.5 days, use that for the raw case. All right, you can change this. The idea is just for you guys to know that these are accumulated periods. So I'm using 30 days, okay? So how are we going to be doing? Well, first of all, we need to get the inventory, right? So where does this well, the inventory amount 0. So where does 4,500 comes for? Well, it's just a quick formula here. The formula is just the multiplication of 5 pesos. This is gonna be 5 pesos times 90% times 1,000, right? Because we want raw materials, this is units, and this is unit cost, okay? So that's where I got this 4,500. And then I say that it's a standard production. So that means that the increase in sales is actually also an increase on the production. Just as Renata said, if you have sales that they are increasing, you also need to purchase more. So I need to add this up by 5%. So you can see here the raw materials increasing by 5%, and I have the accumulated here. That is the addition of this one plus this one. Okay?
Yes.
So so far I've just been working on the on accumulating the inventory or putting together the information. Okay, so nothing else has happened, just that. And if you see the increment, which actually I have it in Spanish, I saw I translated everything. It's here, and that's 5% of the previous inventory. Okay, so everything here is just information to don't get lost. You could also just have put this inside inside one of the inside one of the cells, and that will have it also. That also will have incorrect. Okay, because what we are just working on is on getting the final inventory, the accumulated inventory. So, are there any questions so far?
No.
The
No,
free
thank
sales are always given by the case.
Well, in this case, we do have them for this exercise. Just think about the what is the raw case scenario, right? You may not have an increase in sales. This is just to make it a little bit more complicated and understand the main idea. But well, to answer your question easily, no, you won't have them all the time. Okay.
Oh, thank you.
Okay. So next part of it is we need to have this cost of goods sold of the period. All right. And I need to have it for days. So how I'm going to find the cost of goods sold of each period, like the period cost of goods sold? This is the
Well,
cost
you
of goods sold,
can
and this is accumulated.
you can divide the ending period inventory by the ICP.
Well, no, if you divide it by the ICP, you are actually dividing by the answer that you need. And we need the period. What?
The number of days.
Yes, the number of days, the number of accumulated days. So all we need to do is just, well, this actually is something that you do when you are working on the cash conversion cycle. It's just check out the days and do a division according with the periods. So in this case, it's not different. You need to divide this one, between this one, and it's gonna give you the daily cost, okay? So that is from the period you have the raw material, the moment, I'm sorry, you have your raw materials until you have your finished products or ending inventory, you have 25 days, okay? And each day has a cost, and that's the number we need to calculate the ending inventory using the formula, and so we just need to divide, all right? This is the division of this one, and this is the division of this one. So once we have that, next part is just multiplied by the inventory conversion period, and this one times this one, and there is your ending inventory. Your forecast of ending inventory, okay?
Yes.
Yes, perfect. So, what are the, again, what is the finished inventory going to give you with that? Well, ending inventory, I'm sorry, actually. It's that it's gonna show you the different capacity and standard costs, and if it changes, it can be showing that there are changes in production process, changes in cost of inputs, and changes in operating efficiency. And again, remember, this is a forecast. So imagine that we end up, well, we have the forecast for the first one, right? 3,843. Okay. And then just imagine that the next month, I mean, that's like the forecast, and then the real is maybe 2,246, something like that, right? So what does it mean that I end up with less inventory? Well, it could mean that maybe I change production, maybe my cost of input change also, maybe my operating efficiency change. Well, actually, this couldn't be because it's less inventory. Or maybe it could be this one, if this one is also accompanied with an increase in sales, because it meant that I sold more than what I expected. So my ending inventory was less because I sold it, right? So the idea is for you guys to have and know what this information comes from. And you know that this comes from a standard analysis. That is the standard costing, the standard cash conversion cycle, all that information that you were expecting. And then you compare it with the reporting information. And that's where you take decisions. Like, if it's less or more, you know from where the information is coming, so you can take decisions. So if everything is clear, I want you guys to work on the case inside your the Excel you just downloaded. That's the spreadsheet says inventory, all right? So again, I'm gonna make breakout rooms. I'm gonna be visiting the breakout rooms. Please, one of you share your screen and everyone participate to build the information, please, okay?
Yes.
Okay. You gotta join to your breakout room, Ana Paula.
¿Lo tenemos que descargar cada uno?
No, ya creo que solo con una persona.
Ah,
Bueno,
ok.
no, creo que sí,
¿Sí? Ok.
todos. Porque sí los pidió, pero que alguien compartiera.
I am here, guys.
Professor, do we need to download it? Everybody has to download it or only one person?
Well, do download it, everyone, so you can all be practicing. But this is not something that you need to upload.
Okay.
It's just a class activity. So you work on it as you want to work on it.
Okay.
Variable.
Thank you.
Variable and absorbing cost class activity. So well, anyway, so what you guys are doing? It's everything all right?
Yeah, I just can't find the document to download.
Go to your activity
I-
there. or I don't know who is sharing their screen. Thank you so much, whoever is doing that, because it's showing where. You go to the activity 1.4, then you click where it says here, and there you will download it.
Okay, thank you.
Okay, so I think everything is correct. Also, someone put it on the chat, so you
Yep.
can also download it from there.
There it is.
It was Guillermo. Okay, so I will come back with it at this one because I think you haven't started yet. But go on, try and solve it. And I put the example at the right place so you can like compare it
Oh, okay.
right side.
¿Qué esas son las respuestas?
No, the one on the right it's the example we saw.
Oh, yeah, I see.
So it says there, look at the end, example.
All right. Okay.
So
Thank you,
so
teacher.
you don't get lost.
Thank you.
Mhm.
Selecciona todo el cuadrito y pon líneas. O sea, que hagas un cuadro. Una tabla, pues. Ah, ya entendí. Y ya pues nada más te marca esa parte, pero ya no haces como todo el copiar, pegar. Ajá. Ay, aquí no se preocupen. Gracias, sigamos. Ok, entonces, en el mes 0 vas a hacer la...
En la línea que dice increase sales bar cost, ahí nada más si quieres ponle en esta, aquí
¿Ahí?
pone de que 8.9 como para guiarnos y para que puedas hacer la multiplicación.
Ah, va.
Y
8.9.
ajá. No, bueno, o sea, hazle 0.089 para que te lo deje en porcentaje.
0.
Ah, bueno, como ya está en porcentaje, creo que ahora, a ver, dale enter.
Ajá.
No, sí, ya está en porcentaje, si quieres.
0.89, ¿no?
Ajá, si quieres ahora sí ya ponle 8 puntos, o sea, ándale. Ahí está.
Solo hay que moverle los decimales. Ahí está.
Listo, igual en el 2, igual en el 3.
Está.
Y ya nada más sería de que...
Well, I think you guys are doing great.
Thanks, teacher.
¿Así? ¿Sería 107?
Sí. Ajá. Y ya en la de
Oh.
abajo, si le pones eso por 8.9. Exacto. Y el incremento, pues, es 8.9, ¿no? No. El incremento sería...
El incremento aquí está 225.
Espera.
Aquí sería pues el 8.9. Luego 225. Esto no sería una red. Bueno, no sé.
Ah, ya vi. Eso es lo que te dio el 8.811.
Ajá.
Esa va abajo, en incremento.
Ok.
Y ahí pones el que tienes arriba, el 107.000. Y ahora sumas el 107 con el 99.
Ah, ok. Porque se está sumando. Ah, ok.
I think you guys are doing great.
Le vas a sumar el accumulated.
En este no era
No, a ver, espérate.
el de abajo.
Sí, creo que lo que te dije va en el de abajo.
O sea, es al revés.
No es al revés. A ver. En ese, o sea, lo único que te falta es sumarle la celda D19 en la
O sea,
fórmula.
a este le sumo las celdas de 19.
Ajá.
Ah, ok. O sea, así.
Ajá. Y ahora, en el de arriba vas a sumarle a la E19 la D18.
Sí, nada más. Dejen checo si sí es el accumulator. Vamos a ver cómo lo hizo el profe. Sí, sí es. Entonces ya quedó. Woo!
How did you get to the second
Nice.
What?
the second month?
The second
The 62,000.
62,000. Where is it? Can you show
Ending inventory.
F25.
F25?
Ending inventory. Ending inventory.
Ending
And the
inventory.
inventory.
We
And,
multiply. It's okay.
Could you please double click on the 225,000? That is the F18.
This one?
Eight,
Oh, keep going
F18.
up. Keep going up.
And here.
Uh-huh.
Month 2.
So you are not accumulating all the periods, right?
Okay.
There you only accumulated 2 periods. That is month 1 and month 2.
Hold on.
Go to mine, to the example as you did before, and press escape there. So go to the example and look at the 14, for example. What is the 14,000 adding up? So out of the ones that you add up, so you add up in this one the month 1 and 2.
I know. Like it will be like this. Instead of 19, it will be 18 like this, right?
Okay, click it. Yes, it will be like that.
Mm-hmm.
So the next one. And do you understand why is that one and not the other one?
Yes, because you need to add since the beginning. We were adding just month 1, month 2, and then month 2, month 3.
Exactly, you need to add the complete period. Otherwise, when you divide using the accumulated periods, you are not using the complete period days.
Okay.
Right? If you double click on the daily cost, you will see
Yes.
that it's directed to the accumulated period. All right, and you have to have everything on the same time frame. Now the 452,000, it's a accumulated period of 3 months, and also the 4 months, and also the accumulated days. It's 4 months, 120 days.
Okay.
So that's the reason. Good job, guys.
Thanks.
And
Thank
girls.
you.
Profe.
Hola.
Hola, profe. ¿Cómo se saca el daily cost?
It's a division. So check at the example at the left, at the right. I'm sorry.
This one.
Okay, so it's well, it doesn't have formulas, of course, but it's a division of 2 numbers, and this is the number of accumulated inventory, accumulated cost. I'm sorry, and the accumulated what? This is something that you actually took from the other classes with module 2. So you remember what you need to divide? The
This
cost.
one and this one?
That one, yeah, exactly. So divide, so you can see it, divide here the 9,000.
Para que no vea lo mismo.
Well, there you don't have the value, so I was thinking of that one, yeah.
This one?
No. Go back to where you were standing, to the 150, and just drag the formula to the right.
¿Cómo?
Click on the little square there, yeah. And double click on that 150, okay? And that's that, you see? And that, if you add more decimals, you will see it's the same number as the 153.75.
Okay.
So add decimals. You see? So it's accumulated divided over accumulated days. Accumulated.
Okay, thank you.
que hacer es...
Eso sí no entendí cómo lo saco. Ah, no, pues ahí te lo da, olvídalo.
Ah,
Ahí te
es
lo
el
da.
que nos da.
Hay 25.
Luego el ending inventory.
Pues nada más es multiplicar eso, los daily
Ujú.
costs por los días de inventario.
Sí, así es.
Pues creo que ya.
¿Creen que ya?
Mm, Pues tenemos que hacer también el caso 1, el 2, el
No,
3 y el
no.
análisis.
Yes, do it all. No. No, we are gonna be checking one
All
case at
right.
a time, so don't worry.
So we guess we're done.
You are done. Yes, great. Thank you.
Yo voy contigo entonces.
Ay, Víctor, ¿vas conmigo?
I was already here. I'm
Sí.
sorry.
Hi, teacher.
¿Es al final o cómo? ¿Sí?
Okay, you also finished, so I think everyone already finished. So we are going to close the breakout rooms to return to the main room.
Okay.
You don't have any question, right?
We have to upload this, teacher, or not?
No, you don't have to upload it. It's just class activity.
Ah, okay. Teacher, oh.
Uh-huh.
I wanted to ask you that if the ending inventory, what does it?
I'm sorry, who was making the question? It was actually quite because
What that the ending
because-
inventory? What does that mean?
well, it's the inventory you need to end up each period. Like after producing for the next month, you need to start with that ending period from the previous month. So
Okay.
if you have a production line and you do the production, right? And then you end up with more inventory that you budgeted this way, it means that your cash conversion cycle changed. So there is something in your production that didn't went through, okay?
Okay.
So you redo the cash conversion cycle analysis and there you find the difference.
So, Prof, so you need to start the next period with the ending inventory?
That's the idea. It's a budget. It will be like a budget inventory. It's a forecast.
All right.
So your idea is you do this and you say I'm going to start with what was the first month 90,000 something, right?
Which in the
86,000. So you go and you say, well, next period I'm gonna end it with 86,000 inventory. Why?
Okay.
Well, because I have this inventory conversion period, I have this cash conversion cycle, I have this standard costing, whatever. You have all of this, all right? And
All right.
it turns out you end up with more inventory. Well, maybe like with double of the inventory. It means something changed. Like in all the analysis you did something wrong. So you need to reanalyze the cash conversion cycle, do again the standard costing analysis, and then you will find what was the difference, and then you can act on that.
All right, thank you.
This is a way to forecast the inventory, yeah. Okay. So, this is the answer. You guys got to that answer. Yeah, you all guys did it correctly. As you can see, it's not that difficult. The thing is that you need to, well, I ask you to order the information on a certain way because I wanted you guys to see that, it's actually, you need to work with accumulated information. So everything has to be in the same time frame. That was the idea why I fixed the information like this. If you do it for the case, you don't need to exactly do it like that. I mean, you already now have it, well, this could work as a, what is the name? As a calculator of sorts of that inventory, and you can use it, of course, that will be okay. But if you go ahead and do it everything in one cell, for example, or use different sheets to do it, well, sheets, that's not gonna be incorrect. As long as you find the right amount, that is the final result, it's not gonna be bad, all right? Okay, so if you don't have any more questions, we're gonna move to the next part of the class, okay? Next part of the
Wait,
class.
I didn't have a question, sorry.
Okay, what is your
What
question,
did you
Nadia?
calculated the ICP?
Well, this one is actually a given data from
Yeah,
us.
but how do you obtain that data?
I asked it to the What is to the project manager.
Okay.
And where do you get it? Well, you got it from the cash conversion cycle.
Okay.
It's something that Samson is in teaching you.
Okay.
Yes.
Yes, it's okay.
Okay, and I'm no one. I don't want to teach you how to do it because you are supposed to already see it with him. And if I show you a different way, we may have conflicting classes. So it's a data in the class. In this class, it's a data you need to take from that analysis. Okay. Not okay.
Yes, teacher, it's okay.
Okay. So let's go to the variable absorbing costing. And again, as I told you, these are analysis of cost accounting. So let's learn how this analysis are this analysis, what do they mean and how you can use it to analyze standard costing. So there are 8 basic postulates of accounting. These are the 8 basic postulates. And there is one postulate, number 5, it's called association of costs and expenses with income. That means that every expense and cost that you are putting inside the income statement, it has to be related with the income. That's the cash flow, not cash flow, I'm sorry. That is the income revenue that you have in the company. It means that all the money that you are recognizing as an expense or a cost should be used to generate that income, okay? So from this basic postulate, it comes the analysis of variable and also absorbing costing, because those are two different ways you can use to build an income statement. So let's start with the absorbing cost method. The absorbing costing actually it's the one that you find in general accounting information, like general financial statements for use for external shareholders use this method of accounting. And what it does, it actually helps you because it generates inventory for the company and it complies with the association postulate. That is, you only show as an expense or a cost only what you are selling. So in the absorbing costing, you have the direct raw materials, the direct labor, the variable overhead, and the fixed overhead, all inside the cost of goods sold, okay? So all the elements of cost, you have them there. It's pretty simple, it's what we've been seeing so far. So what it's going to do, well, you know, there is a separation of cost of goods sold and also selling expenses. We saw this separation and this like classification of cost in one of the classes. So think about these costs and think how they go to the income statement, okay? And the idea is that you take the things that you are selling inside the income statement. Not necessarily everything that you are paying in that month to produce, but only the parts that you are selling, all right? And also only the part of what you are using to operate the business into the income statement. I'm not using income statement, profit and loss. It's mostly recognized as that in English, okay? So this would be the income statement for the absorbing costing. You have the sales, you have the cost of goods sold, you have the gross income, then you have sales, general, administrative, and you end up with the operating income. Of course, these are negative values. Well, then you have taxes, depreciation, blah, 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 and you get to the net income. We are not going into that. Here you will have the net income. We're not going to get into that. We're going to stay on the operating income because this is an analysis for operating purposes.
Teacher, what is SG&A?
This is sales, general, SG&A is the way you're going to find it everywhere. And this one, you're going to find it as cost of goods sold. Okay?
So what's the difference between the sales and the sales general and administrative?
It's the same. It's sales expenses and administration expenses.
Oh, okay.
It's the same. It's just the way you will find it inside the income statement.
Okay.
Mm-hmm. Now let's see the variable costing. And the variable costing, the difference is that only used for internal. It's only used for internal purposes, and the reason why it's because it won't generate an inventory. And maybe you're thinking, well, why is the inventory so important? Well, if you have pending, like you have ending inventory for the next, you have 2 periods, for example, one period. Well, let's say 3 periods. This period you produce 100, you only sell 50. You are gonna end up with 50 beginning inventory, right? So if the next period you produce only 50 and you sell 100, well, then this one you're gonna be using it here because you are selling 100, so you need the 50 produced and the 50 from the previous period. We don't use that one. Okay, so that means that you need an inventory to actually put it here. If you don't have inventory, what you will end up will be like in the first period you sell 100 and then you will subtract the 100 because you don't have inventory. You are recognizing everything on the same period. And the next period you will have sold 100, you know, this one. You only will recognize 50 because it's your production. This one here. Okay, and this will give you 50. So which one of these two is correct? Both use the same information. According with International Financial Reporting Standard, you should use this one because it's the absorbing method. And again, the variable method will only show you variable things inside the cost of goods sold, right? The fixed overheads are taken as general administrative expenses. So what that does, it actually basically gets rid of the inventory. You won't have any inventory inside your income statement, inside your balance sheet, I'm sorry. This is the way the variable cost of goods sold will look like. So you have the sales, have the variable costs here. The difference between these two is no longer called gross margin, it's now called manufacturing margin. Then you have the variable sales general administrative, again, a subtraction. And then you have the fixed. You have the fixed costs, cost of goods sold, and the fixed sales general administrative here. And look at this, as operating expenses. You see them? Because it's in the operating income, no longer as part of the cost. So the results here, and you end up with the operating income. And again, remember, in this way, if you have period 1 and then period 2, and in period 1 you sold 100, you produce 100, you have like this, because you don't have inventories. And in the next period, if you sell 50, if you sold 100, would you produce 50? You won't have the inventory of the. This is incorrect. I know it's sales cost of goods sold, right? You won't have this difference of inventory here because you already recognize everything here, even though you didn't sell it. Okay, so that's the main difference between those two. So let's do an example because I think everything is more clear when you use examples. Okay. Here is just showing you guys that absorbing costing has all the fixed things inside and it generates an inventory, and the variable cost only use variables and it takes a fixed overhead cost as present as period expenses that is inside the period part alongside with the sales general administrative. So we have a company that manufactures calculators, and the company produces 50,000 units a month, and they are sold. All the units are sold at 50 pesos each calculator. And this is the following is the financial information. So we have our production cost. This is our variable cost. These are fixed cost. These are total production costs. Then we have the sales general administrative. We have variable. We have the fixed, and these are total sales and administrative. Pretty easy. Now we have our production. Our production is 15,000, and we use it in fixed and variable because we are gonna be selling what we produce. Okay. We are selling what we produce, and I told you that we produce 15,000 and we are selling, they are sold. So sales are gonna be equal to production in this example. Really important. And this number here is just the division between these two to get you the unit cost, okay? 35 of variable cost, 10 of fixed cost, 35 in total, and this will be the unit cost of the calculator. Right? And then we have the variable here, sales and general. And to work on the costing of absorbing and variable costing, we need to take the variable as unit cost also. So we take the 55,000 and we divide it by 15,000, and that gives me 5 pesos on units. So far so good. I think all I'm doing is just listing the information, nothing more than that, okay? Just list the information, you have 15,000, you have production, divisions, blah, 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 you get the unit cost. Really easy. Any questions so far, guys?
And that is for absorbing?
This one is for absorbing. Well, actually this part will be for both of them, because the first thing you need to do is get the unit cost.
Oh.
Now we're gonna work on the absorbing, okay? Katia?
Yes.
Okay, so this is the income statement for the absorbing cost. I'm trying to open my Excel. Okay, so how did we get to this one? Well, what we actually did was we took from here. First off, we are taking the sales, right? And we're saying that sales are the same as production. So we take the sales, and that will be 15,000 times the price, which will be 50. And that is 750,000. So far, so good. It's not something from our world, just pretty simple. Then we need the cost of goods sold. And again, we are selling what we produce, and we know that our unit cost is 35. So we're going to take the 50,000. We're going to multiply it times 35, and that's going to be that number. Pretty simple. You subtract these two, and you get to this one, which will be the gross income. Okay? Nothing different so far. And because it is absorbing costing, and we are not differentiating between variable and fixed costs inside the cost of goods sold and the sales general and administrative, what we do with the sales and general, we just register them as we would in any income statement. So we just put them here, and we end up with 100. Okay, so that's when you get to the absorbing costing method. Is there any questions?
So for example, in the absorbing method, what you do is like not differentiate the different types of cost. You just put them all together.
Between variables and fixed, yes.
Okay, thank you.
And these examples, the variable and absorbing, are only used for cases where all the inventory is sold?
Well, in this example right now, it's when all the inventory is sold. This is the first example. You are selling what you're producing. We're gonna see examples of what happens when you sell more what you produce and what happens when you sell less of what you produce.
Thank you.
Okay, so let's now see, and again, remember, these are methods of analyzing cost accounting, okay? You are supposed to do that when you're working on analyzing the information. It's not like you do it like every day, right? Like with the financial statements. It's analysis. Next part, we're gonna see the variable, and this looks like a little bit difficult. I mean, more difficult than the other one, but it is not. It's again just multiplications. So sales is the same. We have 50,000 times 50. And why is the same? Because it's the same number, it's the same period. We're just using two methods to analyze. That's 750,000, okay? So if it is the same, how am I going to get to the variable cost? Well, here you're already seeing a difference, and the difference is that here we do differentiate between variable and fixed, okay? Because if you see the last one, this was the cost of goods sold inside the income statement, and here is 375. So the reason why that is because we are doing the difference between the type of costing, and this time we take the fixed cost separate from the variable cost. So we are going to use this number instead of this one. So here we take the 15,000, which is the produce of the month, I'm sorry, and we're going to multiply by 25. That's going to give you 275. It's no longer called gross income, now it's called manufacturing margin because you are only using variable cost. And you need this number when you are doing, for example, break-even point. So that's why you take it out. So now we have that, we have the manufacturing margin, and now it comes the part of the variable cost, the variable expenses, I'm sorry. And if you remember, I told you that you need to take this one like this because we were going to use it in the variable cost analysis. So this is the number we're gonna use. Instead of just writing down everything like we did here, we're gonna separate it between variable and fixed. So we take the variable and we multiply 15,000 units that we sold times 5, because 5 is our variable expense of sales general administrative, and that is 75. Now we have the contribution margin. Okay, now we have everything variable inside the analysis. Here is only manufacturing margin because it doesn't comprise, I'm sorry, sales and general expenses. Variable still, it doesn't have sales and general, it only cost of goods sold. Okay, in this part we do include sales, general, and administrative because we need to know what is the complete variable cost applied to our sales, and that will be called contribution margin. Now we move to the fixed costs and expenses, and look at the numbers here. There is no multiplication. We just take the fixed, which will be 150,000 here, and 50,000 for the sales in general. So 150,000 and 50,000. All right. Of course, these numbers are negative. This 200,000, well, it's the addition of these two. And the difference between this one and this one gives us the operating income. Do you have any questions?
Teacher, I don't understand why it changes like the 50, the 25, and the 5.
Well, it changes because now we're only using variable cost. So instead of selecting this one here that we did in the absorbing costs, this one, you see, I use 35 here. I'm gonna split it. So I don't wanna use this one. I'm only gonna use the variable cost, 25, and the variable expense, 5.
Okay.
So I go here and I have 25 and 5.
Okay. Thank you.
And this is the same because it's the price.
Okay.
So far, so good, right?
And in the absorbing, you don't use any fixed or variable, right? It's just like the same.
In what? I'm sorry.
In the absorbing costs, you used what cost?
Yes. In the absorbing cost, you put everything as you will in a normal day. That is all the costs together and all the expenses together.
All right, thank you.
Here you separate them. Okay, so if you see them now, well, it doesn't make too much sense to do this because if you see now, you have the same value here and here. You see it? You have operating income, equal operating income in both of the cases. So one could make the case that it's not useful to do that. But the reason is because we are producing what we sold. So that's why it's the same number. We're gonna be seeing, well, and why is that? Because we don't have inventory. If you are producing what you sold, you don't have inventory. So we cannot see the effect of the inventory being evaluated in any of the two income statements. So right now it's the same. It's a good thing just to learn how to do it. So let's go to the variable and absorbing methods inside your Excel spreadsheet. And again, I'm gonna do breakout rooms, and you guys need to work on that. Try and share someone different this time so you all can work together. Like the more you share your screen, I am convinced the more you will be learning. So the people that share in the previous breakout room, of course, if no one wants to share and only you are willing to do so, well, share your screen. But I encourage you guys to try and be different people that share their screens to try and work on these cases. Okay, so what you need to do for the absorbing costing? Hello?
Hello. I don't know how to start, teacher.
Yeah.
Start with the sales.
I got a little lost in the second part.
Okay. Work as we did before. Just first do the absorbing and then do the variable. And start with the sales. Help your classmate, guys. Don't just.
It's I would help, but I have a lot of doubts too.
Teacher, is the presentation, is it in Canvas?
No, because the presentation has the answer of the cases.
Oh,
So I'm
okay.
gonna give you the presentation at the end. What I'm going to be uploading is the video. So
Okay.
if you want to review that after the class, it's okay.
Alright.
So
So for sales, to get sales, we just multiply the 85,000 times the 25, right?
yes,
And it's for both, right? The absorbing and the variable.
yeah.
Okay.
Do you all guys have like questions like that? Like you don't know where to start?
Yeah, but most questions, we don't really know enough to ask a question, so we're just listening.
What when I tell you? Well, anyway, so you need to build the income statement for both of the cases. So remember, it's separated between fixed and variable. Start with the sales and then work from your way top to the bottom. Okay, sales, then cost of goods sold, then gross income, then sales general administrative, and end up with operating income.
Okay.
Yes. So and it's the same. It's the same process in all of the accounts. You take one value and then you multiply by some other value. So the key thing here is that you can identify which values of unit cost to use for each part of the income statement. So for example, the sales is sales times the price. Okay, so cost of goods sold will be production times what in the absorbing costing.
Yes.
What would that be? Make a guess.
Times unit?
The unit?
Well, the unit cost, right? With which one?
Yeah.
Because you have 5.3, you have 6.8.
The 12.1.
And why that?
Oh, because it's a variable cost plus the fixed cost.
Exactly, because we don't do a differentiation here on costs. So that will be 12.1. You are correct. You see, you know it.
Okay.
And put it inside the format because you're gonna get lost. So sales minus that is the gross income, and then go down. Okay.
Okay.
You're doing great, guys.
Thank you.
So how is everything going here? No, you don't have to do the next one. Don't worry. The first one, what happened? It's the same. You finished.
We're done.
We're finished.
Okay, great. I think I'm gonna redo the breakout room because some of you are really fast and some other of you aren't. So wait there, please. I need to check the other two.
Okay,
Sure.
thank you.
Listo.
Great.
Hi, teacher.
Hi, student.
Es que me acuerdo que utiliza el acumulado para sacar algo, pero no me acuerdo cuál.
Now you don't have accumulated anything. That was for the inventory. I don't know if you're talking about that.
So, yes, because you multiply something by el 12.1.
Mm-hmm. Oh, I understand now. The accumulated cost, like fixed and variable. Yeah.
You multiply something by that number. It is 1,030,000.
Well,
No.
well, actually, I multiplied production times that number. But what you did here, it's pretty smart. I mean, it's just the same number.
Oh, okay. 85,000
Times
times
12
12.
is gonna give you
Okay.
1,030,000.
Okay, okay.
It's the same. And then and the other one, it's the variable is just separate. Now in the variable you don't need to separate.
Okay, okay.
So you start with the sales and then you separate the variable cost from the fixed costs. So in variable cost of goods sold, you only need to put the variable cost of goods sold.
Teacher, but where does that 1,003,000 comes from? Because I multiplied in my phone and it doesn't give the same number. If I multiply 85,000 plus 12, that one.
Well, it doesn't give you that number. Are you sure?
O sea, da 120.
Ajá, 1,028,500.
Ajá.
28,500.
1, 2, 3 times 12.1. Well, the reason is because I am pretty sure there were more decimals in there.
Okay.
Yeah, and let me see my Excel.
Bueno, si sumas 450 más los 580 del production and variable, te da el 1,030,000.
Well, it does give me 1,003,000. 85,000 times this one. Yeah, because it's 12.1175647. So if you are multiplying like in your calculator, like stand there in the J10 cell and multiply it there.
Human.
The one who is sharing his or her screen, go to the cell J10.
Yes.
J10 and just write down equal time in the 12, that one times the 85,000. You see the same number. So if you're doing it in your phone, that is your calculator in your phone, and you only use one decimal, you won't get the same number. And then stand place on the 12.1 on the cell.
The what?
On the cell with the 12.1. That is the cell that there, and then just add more decimals to that. So go up to that there, and then exactly click there.
Okay.
There you see it.
Okay, okay.
Okay, well that's good and all, but work on the variable statement.
Yes, teacher. Thank you.
So what is the first part you need to put? You need to write down.
Multiply 85,000.
Times what?
Plus the price. Times the price.
Times the price. Great, guys. You're really smart.
Variable cost of goods sold.
So how's it going?
Hi.
Hi, teacher.
Hi. You're doing good. You're good. Keep going.
La contribution margin sería de que restarlo, ¿no?
Yo creo que sí.
Luego,
Fixed costs.
aquí le tienen que poner algo, ¿sí, no? Sería fixed menos.
Fixed cost of goods sold and fixed general administrative.
Eso se pone aquí.
O sea, ahí es 120, ¿no? 1,000.
No, pero ahí sería en el COGS sería el 580,000 y abajo el ya que tienes que calcular, ¿no? El de 120,000, sí.
Ajá.
¿Este?
Sí.
Menos qué.
No, así nada más.
¿Así nomás?
Y arriba ya pondrías el otro. ¿No? Olvídalo. No.
You're going good now.
Arriba, sí.
What do you need to put on fixed costs? One of you already said it.
El 580,000, ¿no?
Ajá, sí.
And I don't know who is...
Aquí, 580,000.
No, arriba. Ahí lo sumas.
And I don't know who is sharing, but the person that is building the case, sharing the screen, do you understand why you need to add them up?
No.
Well, you need to add them up because you need to include here all the fixed costs and fixed sales. Okay?
Okay.
And which are the fixed costs and fixed sales and administrative expenses?
This one.
That one, and which is the other one? That will be the fixed cost. And what is the fixed expense?
This one.
That one, yes. So go down again, and right now you already have one. You see it?
Yes.
So which one are you missing?
This one.
Exactly. Now you can do that, add them up in the same line if you want, or you can put it separate, like one on top of the other, so you know, so you have them separate and you know from where they come from.
Okay.
No.
¿No? Si quieres, mueve.
Ahí donde pusiste el 580, vas a poner el 700,000.
Ajá, sí.
Y esa la pasas al fixed cost.
Okay.
Ajá. Y en fixed cost pones el 580.
Y arribita. Y de arriba del 580. Ahí vas a poner el fix. El de, ¿cuál está? ¿Dónde está? Ah, sí, ahí.
Y ahorita al revés.
Well, you have them like inverted.
Yes.
But you are on the same. You are on the right track. All right.
Ah, ya entendí.
Sí. Y ya lo vas a sumar esos dos. Y ya.
Pues ahí está.
So, and now finish with the operating income.
Ahí está.
Es el 1,600,000 menos el 700,000, ¿no?
Según yo, sí.
It should give you the same as the other one. If they are not the same, this is incorrect.
Yeah.
Congratulations. No, you already finished. I'm sorry.
Ah, aquí está, ya llegó.
Creo que es el profe aquí, ¿no? Aquí está.
Ah, sí.
Hola, prof. Hola.
Teacher.
Yes, I'm seeing you. I was looking at the numbers because I'm seeing that you don't get the right answer because you shouldn't have any difference, right?
Yeah, but
So
can we
I think I already found the mistake. So double click on the 460,000.
Sí. ¿Aquí?
Yeah,
Okay.
double click on that one. So you are taking the difference between the fixed cost and the operating income is the difference between the margin, the contribution margin and the fixed costs, complete fixed cost.
So the sum of these two.
Ah, la sumaba a la izquierda es lo que faltaba.
That one minus what?
Ah.
Sería,
580
entonces,
y 120,000.
Exactly.
Lo que puedes hacer es
Ah, a la
sumar
izquierda pone el total, ¿no?
Ajá.
That's why I have that there, exactly. So you can have that, yeah.
No, o sea,
No.
No, you're right. No. Do it like that.
Nada más sumar estas dos.
o sea, no sumar a la izquierda.
Okay. Now,
No.
on the right, sum.
Bueno, sí.
Ah.
Sí, sí.